Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500, up 3.4% since last week. Looked like we were having a topping pattern that was going to come on back down. It was anything but. We reached new all-time highs, not by much, by about $30 or so since the last top back in February. Oftentimes on return breakouts like this, it kind of continues up for a bit. One thing to remember here too, though, is that we are coming to the end of the quarter on Monday. So the close of the market on Monday will be the end of the quarter. And sometimes what these fund managers will do is they call it lipstick on a pig, or they call window dressing. That's what they call it, window dressing. And so what they do is, when people get their quarterly statements, they just see what they're invested in at the end of the quarter there. They don't see all the transactions that have happened and buying and selling in between. So if the S&P 500 has had a nice rebound like this, what they'll do sometimes is they will window dress it and they will buy a little bit more kind of in the last week of that quarter, so that it looks like, oh, look, NVIDIA had a really nice run and I'm invested in NVIDIA, of course, right? They don't show that they weren't invested in NVIDIA for the entire quarter, except for that last 2 days, right? So I think some of this run up may be that. Wouldn't surprise me at all if on Monday we're higher and then Tuesday we kind of roll over. There is this upward trend line right here that was broken, and now we're just tapping on it again. So I would expect that to act as resistance as we go up. But really high technicals, I mean, we can just click through each of the time frames here and all the RSIs are way up. In the daily here, we're over 70. All right, so this one's up 3.4% for the week. Dow Jones Industrial Average, about the same, up 3.8% for the week. We do have, okay, so see this negative divergence here that we've got on the RSI. It poked up above that, so kind of broke through that one. That did not play out, although each one of these was really, really close. I mean, the RSI there was 70, and then you come over here and it's 68, and then you come over here, 64, and then back here, 63. So barely noticeable. And I mean, this is going back to November of 2024. So not super significant that it punched through there, but it is something. Gold divided by the Dow Jones Industrial Average. Gold underperformed the Dow Jones by 6.5% for the week. So is coming up on a little bit of a double bottom here. So could have a rebound, but my money would be on gold continuing to underperform Dow Jones, at least for the beginning part of next week. And the DXY, the dollar, is down 1.5% for the week. So interesting here. We had a decent level of support around 97, 97.8 or so. And you see these last two bars right here on Thursday and Friday, they just broke down. And this is moderately significant here. I mean, we don't really have a whole heck of a lot to catch it here until 96.5 or so. And then I see a decent amount of support around 95. There's a lot of support in the low 90s, but this is a significant breakdown in the dollar here. I would expect it to go lower in the coming weeks. And the 10-year yield is down by 2.3% as opposed to last week. This is kind of surprising me that the yield is going down. I would figure that fewer people would be buying bonds and the yield should be moving up, and that hasn't happened. There must still be some demand for our debt, or this would be going up. So I don't know if the Fed is buying this, or actually, let me do a little on the spot here. US, what is it? It's USCBB. Yeah, there we go. United States Central Bank balance sheet. Okay, let's see here. So this should be going up, I believe, if the Fed is buying, and doesn't really look like it is. Okay, so maybe the Fed isn't buying. I don't know. There's 15,000 of you and there's one of me. If I believe if the Fed is buying its own bonds, then this balance sheet should be going up, right? It should be doing like that. Let me know down in the comments below what you think. But I'm surprised by the 10-year yield here going down. So that means that essentially right now, people are buying a lot of 10-year treasuries, and that's why this yield is going down. So anyways, 10-year yield minus the 2-year yield is, let's see, the 10-year outperformed by 12.3%. So this is a recession indicator. Once we get above the zero line here and it goes up, that is a, according to Rick Rule, we're here in stagflation right now. Slow economic growth, high unemployment, and high inflation. So this almost looks to me, I mean, it's a little bit long for it, but it's kind of looking like a bull flag here. Well, that's a terrible drawing, but you guys get the idea. I don't know. We'll see if this breaks out more to the upside. I mean, that would definitely fit with our narrative, but we'll see how it plays out next week. My money is on this continuing to go up. And 1 month treasuries, the breakdown continues. Cash is paying less and less, and inflation is going up more and more. So your cash that you're holding in your brokerage accounts or through your bank or wherever you got it is paying you less and less. Last week it was 4.16%. This week it is 4.14%. Okay, so getting paid less and less. Now remember, we want our portfolio to outperform inflation, or you're going to get poorer and poorer. So how do you do that? Well, you watch this show, of course, and you join our free newsletter. So there's no spam. I'm not going to sell your email to some marketing company or something. It's just you and me. One email once a week, comes out 10 a.m. Pacific time every Sunday. It's a summary of all the guests we have throughout the week and this weekend show. And then you get my plan for next week. So all the links for future guests where you can submit your questions, some of my best ideas are in there and they are free. You can go to stevebartonmoney.com to sign up, or just click on the link down below and go to stevebartonmoney.com. Alrighty, the LQD, this is basically corporate bonds. We bought another put on this one and just bought another put option. This one's going to expire January 16th of 2026. I got it for a $99 strike price, and this continues to go up. So as this goes up more, I'll probably end up buying more. And this is basically just a hedge on a stock market crash is all it is. So when the rest of the portfolio is doing terrible, this thing will do very, very well. That's all this is. All right, the US dollar divided by the Canadian dollar. US dollar underperformed the Canadian dollar by 0.4% for the week. So this is the basic trend line that I see here. So this is so I don't mess it up again. Chart go up, USD do good. Chart go down, Canadian dollar do good. And kind of looking like the USD is going to generally outperform the Canadian dollar. We'll see. We'll see. But for this last week, it didn't by 0.4%. But my money is over time. I think the US dollar will do better than the Canadian dollar, although they are all dirty shirts in the laundry hamper. The US dollar is just a little cleaner, just slightly cleaner. Canadian gal says, I just discovered your channel today. Fantastic and thorough coverage. Thank you. I've subscribed. Love to have you. Thank you. Welcome to the Hive. Bob says, first time viewer. Great show. Thank you, Bob. Glad to have you. Welcome to the Hive. And gold is down 2.9% for the week. So I'll put this in the semi-significant camp right here. It broke this little trend line, and this trend line goes back to the end of December, beginning in January. So this is a 6-month trend line, and we just pierced it. Okay, so pierced it down below and then closed the week just above here. So semi-significant because we broke below the 20-day moving average, broke below and closed below the 50-day moving average. Let me pull this up on the week here just to see what the lines are. Okay, we're not quite below the 20 weekly moving average just yet, but that trend line is fairly significant. So the levels that we're going to want to watch for next week, first support line is going to be right around here, and that is going to be 31, alternate H. Okay, so around 31.75, and then the next one is going to be right around here, and that is going to be 29.75. Okay, so I don't think it'll get down to 29.75 next week or anything, but there is a real chance that it'll get down here to 31.75. So that would be fantastic for our gold equities because they'll get cheaper, and especially for all the new guys to the show that have not gotten their gold position yet. I think we are coming up on your opportunity. All right, gold divided by the S&P 500 is, let's see, gold underperformed by 6.1% for the week. So we had this little baby trend line here drawn, and it broke that last week, which doesn't mean a whole heck of a lot, but we do have a little double bottom here, which could indicate a bounce. Although when we look at this last bar rate here, see how we got the action? It's just closing. I mean, that just looks like it's going to go down, so it probably is. That would be my guess for next week, is that gold will continue to underperform the S&P 500. At least initially. And CEF is, where are we? Down 1.8% for the week. So basically, if you're new to the show and you have no gold, I think now is actually a decent time. Well, I shouldn't say a decent time. I should say an okay time. All right, so let's say that you're going to allocate 20% of your total portfolio to gold, all right? Maybe take a 1% position now, right? So in other words, a 5% position in your gold allocation and a 1% position in your total portfolio, right? And this is the reason I say that. So you saw the breakdown with the trend line on gold, right? Now, it could be that we're just going to hit that trend line and then bounce right up. So at least you got something, right? The indicators tell me that it's probably going lower, but in case it's not, at least you got something in there. Now, so for your first position here, I like CEF a lot. This is physical gold and silver on the stock market. And a lot of these gold equities right here, we're hitting the 50-day moving average, which isn't a huge moving average, but it's something, right? It's kind of the next biggest one after the 200. Like most traders look at the 200, and then after that, you kind of focus on the 50. Well, that's kind of right around where we are now, right? So maybe take just a tiny position if you don't have any. For you guys that already have been with us for a while, you got plenty of gold. I don't think now's the time to buy it all, okay? But for the new guys to the show, and I know there's a lot of you, and I appreciate you being here, I think that, now is, it's very common when you realize what's happening to the currency and you see the inflation that's coming and you understand the helicopter money that is approaching us, it's very easy to just jump all in and buy at levels that, a couple months later, you're like, man, I could have got that a lot cheaper. I think this is the time where you could dip your toe in the water and, and then as it gets cheaper, you pile in and get more. Does that make sense? All right. Okay, so CEF, and the way we run this is like these red lines, that's your first entry position. We'll call that a 15% stake. And then down here, the yellow lines are like a 35% stake. And then down here is like a 50% stake. So as it gets cheaper, you buy more, right? All right. Okay, PHYS is down 3.2% for the week. So this red line, your first entry point, just hit right on $25. Next one is going to be $24.25, and then after that, your green line stink bid is $23. And GDX is down 3% for the week, so touching right here on the 50-day moving average. So maybe this is where you kind of take your little 1% position, right? It's right on the 50-day moving average there, but I still really like the $48, $46, and $41.50. I might need to move that 41.50 up just a little bit to kind of catch this 200-day moving average. But see where the technicals are here, kind of middle of the road, 46, MACD doesn't look, it looks like there's still a little bit more of a downtrend to go. Now, I will say too, like when you're in a bull market like this, like see the RSI really hasn't corrected down to any meaningful level since January back here. I mean, we got on, what is this, GDX, back in December, January, it got down into the low 30s. And since then, the lowest we've gotten is into like the 40s, right? Oh, there's a 38. But not huge corrections on these. So once you get in a bull market, you may not need it to get all the way down there, but It's kind of looking like it will, so I'd be a little patient. All right, and GDXJ down 2.5% for the week. So see right there, right on the 50-day moving average. So the green is 20, then the blue is 50, yellow is 200. Moving averages, right? And those are little like soap bubbles. You can think of them as soap bubbles as levels of support. So got right down there. So maybe for haven't had any position yet, take a little 1% plug there. But I still like 58, 51, and then a stink bid of 43, which probably will not hit. But you never know. Franco Nevada, the best gold royalty company on the planet, down 2.7% for the week. So continue, just like last week, continue to watch for that 61.8% retracement. We did hit, let me get my little tool here. Okay, so if we go right here from the last one right there, so we hit it right there on the red line. So you got your first limit order in at 164. Next limit order is going to be down here at 155, and then after that 144. And Gold Royalty Corporation, last week Jordan asked about this one, and he basically asking me if I was going to sell any, and I decided to. So we are down on Gold Royalty Corporation 4.4% for the week. So we had a really nice breakout on this thing. And then I've had this one for a while. And I finally decided to take some profits off the table. I sold about 25%. I'd like to get back into it. I'd just like to see it sell off a little bit. It looks to me like we're probably going to have a little retracement in gold. I wanted to take some gold off of the table, and in a company that I've had for like ever and never sold a single share, I finally took a little bit of profit. So see, if you look here on the technical, see how this RSI got way up at 79, 74, and now it's starting to roll over. And then look at the MACD. See how we're starting to get a little bit of red bars down there. That's usually an indication that you're gonna have a correction. And so if this corrects down, then I'll start adding to it again. You get a bar that looks like that, usually you're going down. Okay. And Origin Royalties down 0.9% for the week. So still above where we want it to go in for a first limit order. Basically anything below $1.30 as I see it is a smoking deal. Just waiting for the deal to go through, and then I think there'll be a re-rating here and we'll be able to snag up some cheap shares. And Barrick Gold is down 2.3% for the week. I may be trimming here and kind of rolling some of my Barrick into other companies. I don't really like what's going on with Mali right now. This company's going to do fantastic for the gold bull market, and it already has. I think I just like Newmont just a little bit more. And speaking of, Newmont is down 2.5% for the week. So I think we just need to exercise just a little bit of patience here. It'll come right down here to the $54 level. It's sitting just above the 20-day moving average. I think we'll get down to the 50. And, if you get within a few pennies of $54, I think that's fine for an entry point. But I like to use round numbers here, 48.50, 43.25, like that to, I put 43.225. Let me do a ninja edit here. Coordinates. There we go. Boom. And there we are. Okay, so 54, 48.50, and 43.25 for Newmont. And Agnico Eagle is down 4.1% for the week. So just touched this red line right here. So if you had your limit order set, you should be in. It's at 115 and it got down to 114.60. So it should have executed. Congratulations, you're in. Next limit orders at 105 and 95. And do you want to retire early? Do you want to have the time and freedom to pursue that which makes you feel most meaningful? For me, that's fishing and looking at stock charts. But that's me. How do you do it? I want to give a quick shout out here to the Rules Symposium that is coming up again, July 7 through 11. It's getting down to the wire here, so if you can't make it out to Florida, then you can join us on the live stream, and a lot of you already have, so thank you for using the link down below. You're supporting my family and me and my work, and our editors and their family. It is an awesome, awesome event. For me, it's my favorite one every single year. Now, there's a live stream that you can join. You don't have to drive out there. You can enjoy it, as Rick would say, from the comfort and convenience of your own home. And remember, there are only going to be companies out there that Rick has in his own portfolio, like this one, Agnico Eagle, right? Last year, when he was pounding the table on this thing, I mean, look at the performance that we've had since then. What's it going to do again? You know what I mean? Set your limit orders, get them in, and there will be about 60 other companies just like this one out at the Rural Symposium. So I used to do all these live streams before I started attending these conferences in person. You know, you've earned this. You deserve it. Your portfolio deserves it. Think of it like a spa day for your portfolio. Just kind of revamp it and make sure that everything's good to go. Link is down below. I would love to see you there. B2 Gold down 3% for the week. So I moved these lines up just a little bit. So we got the red line now at 315, yellow at 290, and the stink bid now at 250. 250 used to be a common occurrence, not so much anymore. I don't think we're going to get down to there. I've got an option on this one, a long-dated option, not till 2027. So I'm looking for a couple little catalysts here. I'm looking that I think are going to happen here in the next couple of weeks or so. Could be any day. And when that happens, I expect this to re-rate pretty quickly. And, you know, when it does, then I'll be out. And Equinox Gold is down 5.5% for the week. So fell right through that $6 limit order that we had. My limit order hit there at $6, and yours did as well. Next one is at $5.60, and that was a little frustrating because on Friday it got down to $5.61, and my buddy Luke says, "Hey Steve, Equinox is at $5.61. Did you buy it?" And I'm like, I got my limit order at $5.60. I'm sure it'll hit. You know, I should have taken the minute and just logged into my brokerage account and just, you know, deleted that limit order at $5.60, bought a market order at $5.61, and I'd be in right now for another position. But I didn't do it. So hopefully I'm right and gold keeps going down. Then Equinox will go down even more, and my $5.60 limit order will trigger. And I think this thing is going to have a bit of a washout sale. You know, the Caliber deal. You know, I think those shareholders are letting their shares go, which is dropping this down. Might be a little bit of dilution coming in here, but pretty low technicals. RSI 33. MACD just looks like starting to run out right here, so we might be getting a turnaround before we get down to $5. You know, if this looks like it's putting in a bottoming pattern, basically anywhere below where it is now, I'll be buying. I'm not going to wait for it to get down to $5. If it looks like a pattern like this right here, and the stock price is at 540, I'm going to be buying for my third and final bet. I'm not going to wait for it to get down here to $5. So, you know, for you TAs out there, be watching for that if you want more of this. Okay, and G Mining Ventures is down 3.6% for the week. So hit the red line and then hit it again at $13. Nice little triple bottom right here. So we got this one right here that was in May 15th, and then again a few days ago, and then again on Friday. So that does appear to be a little bit of a floor there at $12, and we'll call it 39.40. Pretty cool. Next limit orders at $11 and $9.50. And if you want to move that $11 one up to like 11 and a quarter, I think that's probably fine, and it might be even a little better. And Rio 2 killing it, up 9.7% for the week. So this is my favorite junior gold miner. Love this one a lot. I just keep moving these lines up and they never hit. I'd like to get more of this thing. It's above $1 now, which I've never seen. I've never seen it up at these levels, so this is pretty sweet. We were way in the black on this thing. But yeah, I mean, it just seems to be obeying this 20-day moving average and the 50 here. I'd love to see a retrace at least down to like 85 or something. Might be able to snag more of this thing. And silver is up 1% for the week. So kind of in a range right here, just kind of been going sideways for a while. I don't really see any up or down as far as a bias. We do have a decent little support here at 35.50. And then after that, I see it at around like 34.50. There's quite a bit of price action. So if it got down to 34.50, I would probably be a buyer in some silver equities. If it got above $37, then there's not a whole lot to catch it. Like if you zoom way out on the chart going back to like 2011, there's not a lot to catch it after 37 until like 41. So if we get this closing above $37, I think 41 is kind of our next level. All right. Gold divided by silver, so the gold to silver ratio. Gold underperformed silver by 3.8% for the week. So it took 94 ounces of silver last week to buy 1 ounce of gold. This week, it takes 90 ounces of silver to buy 1 ounce of gold because silver outperformed, hitting right here on the 200-day moving average of this ratio. Yeah, I'm not really sure which way it's going. I mean, it looks like it's going down. So it looks like silver is going to continue to outperform gold. And PSLV, so this is physical silver on the stock market. So if you're new and you want physical silver exposure, which is the safest way to play it. I mean, these miners are pretty pretty risky. Not that this one isn't risky. It's super risky, but not as risky as them. This one is up 0.2% for the week. So I drew this like last minute little line in right here at $11.75. And this, I think, is kind of like for the new guys to the show that this 11.25, I probably need to move these up a little bit, may not get hit. This could be your first little entry point right there, right? This is like the $35.50 level on silver. And this one down here is like the $34.50 level. Does that make sense? So, this is a way to buy shares of physical silver on the stock market, and that could be your little 1% entry point to kind of dip your toe in the water, get you interested, and now you start paying attention, right? All right, SIL, the Silver Miners ETF, is down 1.4% for the week, so we're now past the point of concern on this one. This one, everything we own here is on the house's money. It's free. I like the first entry point at $43, then $40, and then $36.50. And SILJ is down 1.2% for the week. Kind of same thing here. Silver, hoping that silver gets slammed so we can get back into these things and double down and do it again. Although both of them, like if you look at SIL and SILJ, they're both putting in the same kind of patterns here. It's kind of like a bullish flag right there. So it'll be interesting to see if they play out. Same thing for this one on SIL. Same kind of pattern right here, kind of a flag pattern. We'll see if it breaks out like that. If it does, there's some serious upside to this thing, but I'd prefer not to bet it just yet. And our favorite silver miner, Pan American Silver, is down 3.3% for the week. Same kind of pattern here. You can kind of see like a bullish flag pattern, not as pronounced as the other ones. And I certainly wouldn't want to bet this to the upside just yet. I'd rather see a retracement down here, kind of get in, bottom pick this thing. Maybe we'll get lucky and silver get whacked, and then these will come back down. The technicals looking like they're going to. So I'd be a little patient here on this one. But, if you did want to take profits in this one, I think your moment's passing. The last couple of weeks were better for that. Now you may want to just hang on for the ride if you didn't do it. And one question here on Pan American. James says, is Pan American Silver really a silver miner? What % of its income is from silver? Unless I'm mistaken, maybe you guys can check my work, but I think right now it's about 20 to 25% is from silver. And now with their acquisition of Mag Silver, that should jump by about 10% or so. So I think it's going to be up to around 30 to 35% of their income, which is pretty cool. So it's pretty exposed to silver. I have it here under the silver miners, even though most of their income comes from gold. There's not a whole bunch of like pure silver plays. So that's where I stack it. All right, and copper, paging Dr. Copper. Copper is smoking it. Maybe our narrative is finally playing out. We were back above $5 a pound for copper. Closed the week at $5.12. So this is our little baby trend line here where maybe you can add equities. I prefer, though, to wait for this longer term trend line right here, this white trend line. And we can see that every time it has been tagged, it has been an amazing time to add copper. So I kind of look at it as whatever we got, we got. And then when it comes back down to here, our last chance was on Liberation Day where we added. But whenever it comes back down to here, that's your real spot to add. And gold divided by copper, gold underperformed copper by 8.4%. So last week, it took 800 pounds of copper to buy 1 ounce of, no, 800 pounds. It took 700 pounds of copper to buy 1 ounce of gold. This week, it takes 642 pounds to buy 1 ounce of gold. So this bull flag does not look like it's playing out. I think I could probably delete that thing. Looked like it was going to, and I was kind of hoping it would, because that would mean that copper would get whacked, you know, or gold would do amazing. I'd like more copper, so I'd like copper to get whacked. But anyways, didn't play out and even broke through the 200-day moving average there. So getting pretty low on the RSI. You can't go too much by that on these ratio charts, but it is interesting to see how much copper outperformed gold. And COP.U down 6% for the week. So interesting that copper was up 6% and a physical copper fund was down 6%. It just ended so high last week up here at 811 where we sold. Now we put a limit order in down here for $7 a share. We're going to try to play from 7 to 8 here. I'm calling it the 14% arbitrage. So I sold half my position here. Now I put on that same position back here to buy. So if it gets back down to here, I'll be back at the same position I had. And up here would be to sell the final 50%, and that's at $9. Not super scientific. I'm just lining back up here where there was some price action, and that's basically it. And COPX is up 7% for the week. So shooting up with the spike in copper. No buys now. We got some resistance up here at 47.25. I like limit orders at 38.50, 36, and 32.50. And COPJ down 0.3% for the week. Interesting that copper was up so much and the junior copper miners ETF was actually down a little bit. So this did not go up as much as I would have thought. Maybe this will play a little bit of catch up next week. So if you're young and spry and agile and want to wake up early, maybe what you could do is basically buy this as soon as the market opens and catch a little arbitrage real quick. Now remember, this fund is super, super small. It's, I think, 13 million. It might be a little bit more with this run up. COPX is like 2 billion. Okay, so don't compete with yourself here. Limit orders only. And but you might be able to catch a little arbitrage. All right, and Freeport is up 9% for the week, so just gapped up with copper here. It's above, convincingly above, the 200-day moving average. Now we just have to stay there. Stay. Looks like we're going to get a golden cross here, which is where the 50-day moving average crosses above the 200-day moving average, which is a pretty bullish sign. So looking good for Freeport. I like limit orders at 37.50, 34, and 27.75. And Bob says, thank you for time stamping your videos. You are welcome, sir. Actually, Jim Bob, the man with 2 first names. You're welcome, Jim Bob. Thank you for being here, and thanks for the feedback. And actually, I can't take too much credit for that. That is my editor, Mark. So everyone give Mark a round of applause. Uranium is up 2.5% for the week. So just about at the lower end of the term contract price. So there's spot market, which is less than 12 months in duration. That's when you just want uranium and you want it now. That's where you buy it. And the term market is 12 months or longer. And the cheapest price on the term market as of last month was $80. So the spot price is $78.90. Not the screaming deal that it was when it was $80 and the spot market was $63, right? So this isn't as good as it was. It's not the screaming deal that it was, but I'm still pretty bullish on uranium. Might be wanting to trim here a little bit, but yeah, I like buying these when they're hated and selling them when they're loved. It's not quite loved yet, but it's tolerated. All right, and gold divided by uranium. Gold underperformed. Like, did gold outperform anything? Gold underperformed uranium by 5.2%. So still underperforming uranium, kind of touching on this, or getting ready to touch on this 200-day moving average. RSI right now is 29, so we might have a little bit of a reversal there. We'll see. And the Sprott Physical Uranium Trust, those guys just love stacking pounds, up 4% for the week. So they're up to 67.4 million pounds. Sprott purchased another 300,000 pounds, and then another 100,000 pounds, and then another 100,000 pounds. So they purchased 500,000 pounds for the week. I might be staying a little past my welcome on this trade. I was buying this when it was, so these are our last purchases right here. So it's up at 1868, got it at 1653, and then down here in the 15s. And I had a limit order that was a nickel away from the bottom here. And I think I need to let that go. But for whatever reason, I just can't. And anyways, we've had an amazing run up here. I know a lot of you guys are in this, but we're getting pretty stretched on the technicals here. Sprott is actually coming in and buying more pounds here. So the moment that we've been waiting for to trade this thing is happening now. I think we need to be taking profits, and I think next week you'll probably see a down arrow here instead of no arrow. All right, and Cameco is up 7.3% for the week. So this one's getting pretty interesting here. So remember, this was only Liberation Day back here, April 7th. Okay, so we're only a few months away, not even that. What is that? Less than 3 months, and we have had a run up. If you were psychic and you bought the bottom, you're up over 100% in less than 3 months. Just saying. Okay, so if you're a trader, may not be a bad time to take profits. Now, what I did here was from this last kind of semi-low right here, I ran a Fibonacci extension, dropped it back down. And we can see kind of these levels where it's had a little bit of, what's the word? Not a hiccup. Yeah, I guess like a hiccup, kind of where you see, okay, let me zoom in here more. So look at these yellow lines going across. This is the 50% retracement. This is the 61.8. This is the 78.6. And now here's the 100% retracement. Okay, it's not a coincidence that it's hitting these Fibonacci levels and pausing for a little bit before it moves higher. Now, it wouldn't surprise me at all, especially with an RSI of 73, if this thing kind of went sideways a little bit and then corrected back down. I think that's more likely than it going up here to the next level of $100. It could, it very well could, but I think it's more likely that it probably corrects back down. Now, if you're not a trader and you've been in this thing forever, you're in the best uranium miner on the planet, and if you're not going to be watching this thing like a hawk, then forget everything I'm telling you right now and just ride this out. You know what I mean? But in the short term, it looks like we're going to have a little hiccup here. Okay? All right. You know, another thing you could do too, I mean, hell, if you were down here and you got it at 35 bucks, which I know a lot of you did because you all emailed me about it. You were like, am I crazy? No, you're not. You did amazing. And now that we can see the future, you got it. Maybe move past the point of concern, right? You're up over 100% here. You can take half of it off the table and now you're riding on the house money, right? Okay. Soapbox. Done. URNM is up 3.8% for the week. Also pretty high RSI. Okay. Now take a look at this. So notice how the price right here is moving up. Okay. So from like last week to here, the price is moving up. And look at the volume here. The volume is moving down. That generally means that if the price is going up and the volume is going down, that the sellers are running out and we're probably about to have a reversal. Go over here to URNJ, and we have kind of a similar story. See, price is moving up and volume's moving down. Probably running out of, did I say sellers? I'm sorry. Probably running out of buyers. So if price is moving up, probably running out of buyers. Okay. So we're probably going to get a little bit of a reversal here. May not hurt to take a little bit of profits here, and then we can always re-enter as it comes back down. And Uranium Royalty Corporation up 5.2% for the week. So we are above the 200-day moving average. Same story here. I put the arrows here to make it easier. And so I remember to talk about it. Price is going up, volume's going down. Okay, so we're running out of buyers, right? So it wouldn't surprise me at all if we had a little bit of a rollover here. Okay, now Uranium Energy Corporation up 3.9% for the week. Now this one's kind of interesting. Looks like it might be a little bit different. Okay, we've got increasing price, but look at the volume. I mean, if we go there, it's kind of like flat. There are a few days here where we've got some pretty good volume. I would say it's kind of flat to up. So this is just slightly different than the other ones. I certainly don't think there's any buys here. I mean, I don't make a habit of buying when the RSI is 58. I make it a habit of buying when the RSI is 24 or 22, right? That's where you want to be buying. But you know, we might have a little bit more room in this. I like that we're above the 200-day moving average, but yeah, no buys here for the uranium equities. If anything, you know, we were all getting them down here at Liberation Day, right? If anything, you should be thinking about taking profits, not buying more. All right, and oil, WTI corrected down 11.3% for the week. So tried to play a short on this last week. I was going to play it through the ERY. That didn't really work out. I ended up losing 3.7%, which I guess could have been a lot worse because it shot up quite a bit and I would have lost even more. This one is interesting. Looks to me like, I mean, we need a couple more days to kind of confirm it, but it kind of looks like, what does that look like to you? Looks like we might be forming out a bear flag. So if we do something like this and it just continues to kind of go sideways, I'll be watching this real closely and I may actually play a short on this and play it to the downside. We'll see. But it's right around. I mean, the $65.40 level that we've been talking about forever as that line of support and resistance, depending on which way it's above it or below it. Like we're there. It's 65.52. So, you know, exciting for oil. And Brent is also down about the same, 11.5% for the week. And look, same kind of pattern right there on Brent. And we, let's see, this is Dutch natural gas times 5.6. So we got this from Doomberg last week. We had Doomberg on the show, and he basically said that this is kind of the energy equivalent of natural gas for oil delivered, right? So if we see these two numbers here, they should essentially be the same. And if there becomes a spread in these where, like, let's say this is trading at $50 and that one's trading at like 90, something's going on in the oil market, and this can be a little bit of a test. So if you guys want to keep track of this, all you trading view guys out there, this is your symbol, TTE1 exclamation point times 5.6. And then keep track of the spread here between Brent and this one. And if they get out of whack, that could let you know that there's trouble brewing somewhere, probably in the Middle East, because that seems to be where it's always at. And let me give a little shout out to the Rule Classroom. You guys can join me over there. It's my favorite price. It's free. I was there last week and I was pulling up stock charts just like this, but I was doing it live. You had me for an hour and a half. You can ask me any company you want, and we could talk it over the charts. You can get this, the Real Classroom, as an app on your phone. You can listen to all the content in the classroom on your drive to and from work. Got top-notch faculty and students. And here's an example of one of our recent students, Pierre. I hope you don't mind me calling you out. He's a student, okay? And he's a retired oil and gas geophysicist interested in natural resource investment. So he's from geophysics at McGill. He started in 1986. He started at the Amoco, Calgary. Then he worked in Nigeria, Calgary, Bolivia, and Saudi Arabia for 36 years. Now, do you think you can chat with anyone in the Real Classroom? And so far, there's 13,000 of us, right? If you have an oil question and maybe Rick isn't available, maybe you could ask this guy, right? Everyone in there is super helpful and very active, and you know, I can't say enough things about the classroom, and I'm still floored that all this content is free. So join us over there in the Real Classroom. There is a link down below, and yeah, I love it over there. It's a lot of fun. I pull up some live stock charts about twice a month, and I love to see you guys there. All right, and gold divided by oil. Gold outperformed oil by 9.4% this week, so this is one thing that it actually outperformed. And we can see here, this is kind of interesting. It's the opposite pattern. This is looking like almost kind of like a pendant or like a bull flag. Need a little bit more time for this to iron out, so we'll see if it actually does it. But interesting here. And XLE, favorite oil ETF, is down 4.1% for the week. I don't really see any buys right now, but I like a buy on this upward channel red line, like if you're looking for your first position, which right now is going to be around 83.25, somewhere in that range. So maybe a limit order for 83.50, something like that. A couple bucks lower than it is right now, and then 79.25, and then 75 bucks. And Exxon Mobil down 4.6% for the week. So hit your red line right there at 108. That's your first little limit order position. I also like 105 that I didn't have drawn on here, but I like 105 as well. And then after that, 103.25, and then a stink bid down at 100 bucks. And Chevron is down 3.9% for the week. So no buys right now, but it's getting pretty close to our red line at 141, and then a next one would be at 135. And Blackstone Minerals down 1.2% for the week. So limit order hit at, I thought I had a limit order actually set for this one, and I think it expired. So when I went in expecting to see that I had more shares, I didn't. So luckily I logged in and saw that, and I got in at 1303 for a market order at the time. But you know, this should have been a buy back here, but anyways, I caught it. So if you guys had a limit order in there and maybe it's expired, some of these exchanges, they expire their limit orders every 60 days. Some of them do it every 90. Some do it every 6 months. Some do it whatever you set it to. This one, I think it was 60 days and it expired, so I had to go in, and luckily I caught it. But anyways, I thought about taking an option on this one too, buying a call, but I didn't. So anyways, I think 13 bucks is fine. All right. And natural gas is down 2.8% for the week. So we got the drop that we thought, came right down to this little trend line, kind of around the 200-day moving average, and shot right back up. Looks like it's going up again next week. Now that I'm looking at this kind of looks like we got a little parallel channel, boys and girls. What do we got? Is that it? Yeah, it kind of does, huh? So maybe we're trading in the channel here. My guess would be that it will continue to do the Charlie Brown pattern and do like that until proven otherwise. And Devon Energy is down 6% for the week. Kind of riding the 50-day moving average right here. I don't think this is it. No, it's down below it. Okay, well, it's right around, no. Forget I said that. I was going to say, I think it hit right around the 61.8, but no, it dropped a little below that, so I wouldn't put any effort into that. If you have no Devon and you want some Devon, this isn't where I would say buy a 1% position. I would say buy like maybe 25%. But most people that have been watching the show, they've had Devon for a long time, and we're not even in the black yet because we've just been buying it on the way down. This is a really good deal right now. And, if you have none and you want exposure to the natural gas sector in America, this is a good time to do it. And then after that, 30 bucks and then 27.50. And Birchcliff down 3% for the week. So retraced just a little bit and then kind of bounced up a tiny bit. I think we might correct just a little bit more. If we go out here on the weekly, we can see that the 200 weekly moving average, this is where it's kind of catching some resistance right up here on the 200 weekly moving average. And Paydo is down 4.4% for the week. So we got a bit of a retrace here on Paydo. Kind of got caught by the 20-day moving average and then broke and fell below it. So I think we're going to go down even further. Looks like 1370 is going to be the next one where we're going to hit the 50-day moving average. Just for ease of memorization, I like limit orders at 13 bucks, $12, and $10.65. Let's see. We've got, next week we have John Polemy coming back on the show. So if you like energy stocks and you like talking smack about our big thinkers and politicians, you will not be disappointed. We've got lots of questions coming in, so be sure to go to the post tab in the community post tab on the YouTube channel and get your questions in as well. And I will ask John on the air, or simply join the newsletter, and there'll be a link in the newsletter to submit your questions for John Polemy. All right, and coal, thermal coal is down 4% for the week. Met coal is down 0.3% for the week, so they're both kind of on the lower end of the range there. And our favorite coal ETF, COAL, is down 0.3% for the week. So I think I'm finally ready to set a limit order on this one, and I'm going to do it at $16.70. So we're going to make that our yellow line, and then our stink bid line back here is going to be $15 and below. Glencore is up 2% for the week, so might be getting a bit of a rollover here. You know, it looked like it was going to happen last week, and then it shot back up on Thursday and Friday. So just can't quite get to that 50-day moving average. Maybe this will continue riding up, but we've got a boatload of resistance up here on the downward sloping 200-day moving average. We'll see. We got to break through that before anything can happen with Glencore. And AMR is down 2% for the week, so kind of looking to me like it's a bottoming pattern. I mean, if we do a kind of a horizontal line right there, I mean, it's pretty much around like $100. It's tapped it 1, 2, and 3 times, and we're basically at it right now. We're going to have Matt Warder back on the show. I was just on the phone with him right before I pressed record, and he will be coming on July 24th. So in a little bit more than a month. I was asking him if he was going to be out at the Rural Symposium, and he wanted to make it, but he couldn't. So next time we'll interview him will be in about a month, and we can pick his brain on coal. BTU, Peabody, down 5.6% for the week. So kind of a flat pattern here. I'm finally ready to draw our first red line in forever on this one. And it is at $12.67. And that was me just getting really into the weeds here and kind of catching these last few points right there. And a yellow line down at $9.60. And another story of the week is platinum is up 6.9% for the week. So I thought I had a platinum expert scheduled for next week. I'm thinking we can work out a time. We'll see. I've been going back and forth with his assistant trying to iron out a time. But Ed Sturck from the World Platinum Investment Council, and you know, platinum's just been boring for like years, and now we're finally breaking out. Finally breaking up to the upside, breaking new levels here. I mean, it's just looking absolutely fantastic. This is going back to 2014. You know, finally breaking out above these levels after like 11 years. I've only been investing in this thing for a couple, but it's good to see that you know, it's finally happening. Pretty stretched on the RSI and the technicals and all that, but when you get some fundamental cases in these PGMs like this, they can radically jump to the upside. So the way to play that on the stock market is PPLT. Now, I don't see any buys here. I don't know how guys buy these breakouts like this. I'm not one of them. I'm the guy that like just bottom picks this thing for 2 years and then finally it breaks out and I'm surprised. Anyways, up 5.8% for the week. Palladium finally catching a bid here. So hopefully we'll get some movement here on Palladium as well. This one is up 9.2% for the week. So looking good right here on Palladium. Next level of resistance we're going to have on Palladium is going to be around $1,250. And, you know, we've just been saying if you want some Palladium for the last couple of years, buy it around $900 an ounce, and now it's up to $1,150. So I don't know. That one would be on you. I don't know. PALL, this is the way you can do it on the stock market, is up 8% for the week. So I liked limit orders on this one at 85, 83, and 80. Those are now pipe dreams. And it looks like we're going to have a golden cross here. The 50 is crossing above the 200-day on PALL. SPPP is up 4.2% for the week. So this is interesting. I think we're going to have a little bit of a re-rating here because platinum is up basically 7% for the week. Palladium is up 9%. And SPPP, which is invested in both of them, is only up 4%. So again, if you're young and spry, full of you know what, and vinegar. Maybe you wake up early on Monday morning and you place your limit orders only. Remember, small market cap, and just try to get it in as cheap as possible. And I got a feeling there's going to be a re-rating here on Monday that you might be able to buy and sell real quick and get in and out of. But that's up to you. All right, now platinum divided by silver finally starting to outperform here. This is where I personally did my my swap, a kilo for 1 ounce. Did a bunch of those, and this thing shot up. So now we're up to 37 to 1. But when we look at the overall like long-term picture here of how many ounces of silver does it take to get 1 ounce of platinum, actually I'll go out to the monthly here. And we can see that long term here, it is super cheap. You know, we've had moments in history where it takes 150 ounces of silver to get 1 ounce of platinum, and we're down here at 37. It looks kind of dramatic because we've been staring at it way down here for so long, but I think we got a long ways to go. Same thing for platinum divided by gold. You know, it's no longer a third of an ounce of gold will get you 1 ounce of platinum. Now it's 0.41. And this is my if-then statements for platinum and gold. If you want to pause and read those, this is going to be my exit strategy for platinum. All right, and nickel futures is up 1.5% for the week. So still kind of just hanging around that $15,000 per ton level. And NIKL is up 2.6% for the week. So we're still above that 200-day moving average, looking good, like kind of bouncing right along there. This is kind of interesting. Didn't notice this before. Well, yeah, okay. I mean, not terrible, but I mean, nothing that I would take a trade on, but interesting. Looks like we're going to get a golden cross here, the 50 crossing above the 200-day moving average. And but I think we probably got a little bit more downside in this. And Centaurus Metals, they're going to need to raise another 25 or 30 million or so coming up here. Hopefully they'll be able to do that out at the Rural Symposium in the next week or so. And they're going to have to dilute a little bit to do it, but we'll see. You know, I think that once they start drilling this thing out a little bit more, it'll become more valuable. And I don't think the share price will drop that much. And so it's down 4.4% for the week. If you want a piece of this, I think now is fine. And the Bloomberg Commodity Index is down 3.6% for the week. This one shot back down with oil. I think now is an okay time. We got the rising 200-day moving average right here. Let me take a look at it on the weekly just so we get an idea. It's below the 200 weekly moving average, so would like to see it close above that. But, you know, if you want into the Bloomberg now, I don't think is a terrible time. I mean, we've got a little bit of a trend line from there to there, kind of at the lower end of it. And iron ore is basically flat for the week. Pretty good recession indicator. I think that, you know, copper being at $5 is encouraging that it shot up to that, but iron ore is still pretty low, so I think recession is here. And BHP is up 5.4% for the week. Almost got to the yellow line, so we had a sell-off. So your limit order here for 48 hit week before last, and almost got down to the $44 level. Not quite, got down to like 45 and change, and then shot back up. So I think now is okay for a first entry point if you don't have any BHP, but I'd like to see it correct back down even more. And the PIC ETF, our metals and mining ETF, is up 5.9% for the week. Shot down, hit the 50-day moving average, and then shot right back up above the 200-day moving average. So I don't see any buys right now. I'd like to see it correct back down. Red line is at $33, and the yellow line is at $30. And Bitcoin is up 6.3% as of this moment. Last week, I thought it was going to break down here and hit the 200 moving average, which would have brought it down to about the $95,000 level. Nope, it got down to, what was the low point there? Low of 98,000. So didn't quite hit it. Came back down, shot right back up. This is basically some Fibonacci extensions without going too far into the weeds. Your next resistance level is going to be up around 109 or so, and support is going to be around 102. Looking kind of like we're putting in a little bit of a topping pattern. I mean, you do have a bit of a downward trend line right here. So that is also some resistance in addition to the Fibonacci extension. So, banana to my head, I think it'll probably be lower next week. Alrighty, well, I hope you guys got something out of that. Be sure to sign up for the free newsletter at stevebartonmoney.com. Check out the Rule Classroom and the Rule Classroom Plus. I would love to see you guys out at Boca Raton. I know a lot of you are going. Be sure to come by and say hi. We're going to have a booth set up. You'll see In It to Win It, and you'll see me and the missus there. So be sure to come by and say, hey, would love to meet you in person. And try out this charting software for free. This is TradingView. You can try it out for free. There's a link down below for that. And yeah, thank you guys for being here. Go to stevebartonmoney.com for more, and have a wonderful day.